Hi and welcome to this OmniTalk. We have been talking about various growth vectors, and we thought that let's connect again and do a quick recap of where things stand, how we are looking at different growth vectors with the where the markets are, where the economic development is taking place on different growth vectors. So Vikas, let's just have a quick recap on various growth factors that we have been talking about. Obviously, the defense and railway infrastructure; these are the two growth factors that are very popular across investors. In fact, now market for the full market, in fact, they are one of the most talked about sectors as such, right? And it's a long journey of 3+ years while we have been investing or kind of talking about these growth vectors, but now they seem to
Nobody
be
used to talk about defense as a growth
growth
factor
vector.
or railways
Right,
as a growth factor three
right,
years back.
right.
And now everyone is talking about it.
Right.
Yeah, so that's
So
a huge change.
yes, so there's a lot of recognition now. The importance of these two verticals. In fact, they were not even seen as a sector per se.
Exactly.
And now that the weightage and the importance that they deserve is right there. So that's a very welcoming fact. Now, maybe we can talk about a little bit how we see these growth factors shaping up from this point in time, and maybe other few of the other growth factors that we want to talk about, in this
Absolutely.
video.
Yeah, so see, coming to defense, which is remains one of the most important growth factors, right? India becoming, in the next few years, the third largest economy.
True.
It remains important in the Indo-Pacific region,
Right.
right? Which is an extremely strategic region, and India controls the movement from Asia to Europe or Europe to Asia,
True.
right? So from east to west, the corridor is kind of under
Okay.
India's influence or control, and India would like to have more and more control, right, to prevent the pirates and those kind of things, right? So to
Right.
promote economic and the commerce between east and
Export.
west,
Right.
it's important that India plays its role
Right.
as an important defense presence there. So given that India emerging as a defense power
Right.
requires a huge amount of investments
Right.
from the Indian Defence Forces. So all those plans, some are public, some are not so public. All that information is there, and all of that growth plans is there, and some of them gets emphasized every year in the budget,
Right.
and then it comes out as specific orders to specific companies,
Correct.
right? And then there is some indigenization.
Yes.
So that is part of the defense thing that remains very very large. There is a order book with all the companies, and then some other discussion we'll have the explanation deeper on what is the latent order book, right?
True.
But just as a very quick example, latent order book is which is not even on the order book yet,
Yes.
but which is very likely to come.
Right.
For example, I'll just talk about the Indian aircraft carrier, right?
Right.
Indigenous aircraft carrier.
Right.
So we have the second one already in place.
Right.
The third one is likely to happen, but not yet
Correct.
ordered,
Correct.
but very close to getting done. So even that is not on the order books,
Order book. Right.
but it's very, very likely. But beyond that, the defense minister has already mentioned the fourth and fifth and maybe
Right.
even sixth
Correct.
aircraft carrier.
Correct.
And there's only one company which can do it, right?
Sure.
So you can kind of see what we mean by the latent order book.
Correct.
Or a
And I
high
think
probability latent.
one step, even like more concrete to that latent order book concept is, what uh, defense DAC, Defense Acquisition Council, what they call as AON, which is acceptance of necessity to certain important equipments or defense systems that, so they in principle approve it. And like last 1 year there was like more than 3.5 or 3.3 lakh crore of worth of AON in different, like or in 4 different tranches that they release the information about, was given, right? And obviously that has not come to the companies of order book yet. but it is broad, like a significant part of it will come to the defense names, and
Absolutely.
and that is not there, but
Exactly.
someone just putting one and one together, they can see the
Absolutely.
growth in the order book at a much faster pace.
So
Right.
one is that the growth potential is very
Right.
high. Second is that you have to start broadening. See, it was very easy 3 years back.
Right.
You could focus on certain companies, pure play defense companies, and you could
Correct.
just invest because they were amazingly cheap.
True.
Now the valuations have come into play,
Right.
and to maintain the valuation, right? I mean, that is the point of a investment portfolio.
True.
That in an investment portfolio, always the discount to intrinsic value.
Right.
Given the growth potential, what is the intrinsic
Mhm.
value, and are you getting a discount to that?
Correct.
So the growth potential is huge. All of that growth potential is not incorporated yet.
True.
But even if you incorporate that new latent growth potential, then what is the latent intrinsic value?
Correct.
Are you getting at a significant discount to that?
True.
That is always the question, right?
Correct.
And that has to be maintained in the portfolio.
True.
And so that requires one, that you are able to see the future
Right.
growth potential and incorporate it appropriately, not getting too
No.
crazily optimistic either. And secondly, to broaden it.
True.
So are there other ways of taking exposure to defense?
So essentially, you are saying that while we always optimize to maximize the growth potential of the particular growth vector or a portfolio, we also aggressively try and optimize the maximum discount to intrinsic value of the portfolio, right?
Absolutely. I mean, that's
So-
the scientific investing framework of OmniScience Capital, right?
Right.
Compared to everyone else.
Right.
I mean, the main thing for us is discount to intrinsic value rather
True.
than chasing growth.
Right.
Growth is what is adding to the intrinsic value.
True.
But what we want is huge discount to intrinsic value.
Right.
So we have done that for defense.
Yes.
Right. So now defense is more broad based. The dimensions of defense, which we have talked about in earlier videos also, we have broadened those dimensions.
Absolutely.
And things like energy security,
Yeah.
things like rare earth metals,
Okay.
etc., have been incorporated, right? Or cyber defense and things like that. So those kind of things we've just started doing. We will do more and more of that as required. Right. That is one part. So that is our job, right? Whether if things are getting overvalued, to rationalize the portfolios, look at forward earnings, look at normalization of the earnings, look at adding new dimensions, all of that is our job. The job of investors is that they should maintain the capital allocation.
Correct.
Right? So if you have 100 rupees in equity, as we always say, and this applies broadly. If you are some conservative investor, you will still have 5% in equity.
True.
Right? Or whatever, X%. So that is 100 rupees. Now within that 5%, how to divide that is what we are talking. And for some very aggressive, very well capitalized, very strong inflows,
They can
zero
have
debt, young person,
very large, right?
He can have 100% or 95, 99% equity. But even then, that is 100 rupees of equity allocation. So within 100 rupees, what do we say? We say 40 to 60% roughly should be
the core portfolio.
Which could be
your
flexi cap, multi
you pick from the large caps
or
or
large
mid
and
cap,
mid, or large
full
and
market,
small,
right?
So all of that is the 40-50, and then remaining 40 to 50 or 60 should be divided into 4, 5 or 6 growth factors with a cap of 10%.
True.
So 10% of your equity allocation should be the cap for any given growth factor, because it's a particular sector. Or a specific thing, right? So that remains, and that we would implore all our existing investors to have a look at their portfolios, and if that is being reached, they should take out some of the money from those growth factors and allocate to something new, which they have not taken exposure, or the exposure is less. And so what are those? Right?
So it's like a rebalance, activity which we do with the portfolio, and you have to do at your, overall allocation basket level
or portfolios
level, right?
Right.
So you have to identify more opportunities, where capital can go, and once you have allocated sufficiently, you have to look at the, that maintain, reasonable allocations to each, right? So talking about other growth factors again, some of them, it depends, like what is the level of discount to intrinsic value that
True.
different portfolios or growth factors will have. But definitely, I think power is one area that we have seen.
Oh, absolutely.
A lot of growth opportunities are there. It is like one of the essential uh, building block of infrastructure or
Even economy,
manufacturing economy, basically.
right? Basically, the economy
Economy
first,
first
and
level.
then infrastructure,
Right. uh,
then
yeah,
manufacturing,
right,
exports,
of course.
right? And then
So
two other ones. One very big one is electric
that is
vehicles,
true.
right? That's a huge
So,
growth driver for having
uh,
higher than expected growth
growth
rates in the power
of
sector.
sector. Right.
And then the one of the biggest things is data centers.
True.
Right.
That,
I mean, very few people would be aware that
mm,
Nvidia, of course, that's not a recommendation. I'm just
mm,
mentioning
correct.
a company which owns one of
Mm,
the most important AI
yes.
chips, right?
True.
So their latest chip consumes in a year the same amount of power as a American household,
American house.
which is
Right.
really a
So
large
right.
thing, right?
True.
So from that you can imagine the kind of power the data centers would be
Consume.
consuming. And there is this indigenization of data
Data.
centers in India, right? That Indian
True.
law says that all the
Right.
data of Indians has to be kept within India,
Within India. Right.
within India. So the AI processing
Sure,
also
sir.
would happen in India, and then you can imagine the kind of
Additional
power
power
demand.
because of that, right?
Yeah, yeah.
Sure.
So EVs, railway electrification,
Electrification,
export and manufacturing
right?
growth, and so on.
And
So
just the base per
yeah,
capita higher
ab-
consumption
absolutely,
itself is going to
absolutely.
go very high.
Yeah. So power is one very
Mm.
attractive, and valuations wise also it's very attractive. Second one is the banking sector,
Banking,
banking and finance,
financial service.
right?
Yeah,
So that is another very
right.
attractive thing,
Right.
and the potential we have discussed earlier as well, right?
True.
That everything
Absolutely.
has to be financed by these
These.
all
Right.
the infrastructure, corporate growth as well as household growth.
Absolutely. So the valuations are pretty
Yeah,
attractive. Again, there is a very big difference between where we see the intrinsic value and where these companies are trading today. So that's an attractive place to
and we
look.
have number of baskets,
Right.
right, or strategies which kind of play on this growth factor, right? We have
Right.
number of strategies.
Right.
Same way, power again we have few.
Hmm.
Now coming to the last one,
Hmm.
we did discuss AI. So
Right.
coming back to that why not have an exposure to that as
To
well, right?
right.
And that also, in our view, the growth potential is huge.
Huge. Absolutely.
Right.
Absolutely. Like there is obviously a lot of excitement about Gen AI and AI chip manufacturers, like you talked about. So obviously, the next leg of that usage or the excitement will boil down to platforms and service providers. Only
Absolutely.
then the large companies can start using it on
Absolutely.
commercial basis,
Absolutely. Absolutely.
and that's what will unfold in next
Yes.
few quarters. So
Yeah.
so that's very exciting in terms of how technology exposure, and specifically AI revolution that Indians and through listed equities can start taking.
Perfect.
Right.
Super.
Great. I think that was helpful in terms of, again, reorienting yourself and having a lot of clarity in terms of how you're going to continue to allocate to different and relook at your portfolio allocations. If that needs any bit of a rejig, then that needs to be done. But stay tuned to continue to hear about these interesting and amazing growth factors from OmniScience Capital. Thank you so much.
Thank you.
So always keep in mind that investment in securities market are subject to market risks. Read all the related documents carefully before investing. And also that registration granted by SEBI, membership of BSL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors.